Good morning and welcome to Market Monday for November 3rd, 2025. Are you glad you didn't sell? Sell in May, that is. In fact, for only the fourth time in the last 75 years, each month of the quote-unquote sell in May period, supposedly the worst 6-month stretches of the year, was up. And as you can see, in the three prior instances, there's a lot of green for November and December. In fact, this sell in May 6-month period was so good, it was the best ever. So clearly, things have been good in the stock market. And by this metric, the best ever. So if things feel good, it's because they have been good. The next logical step would be to ask, what's next? If the historically worst 6 months of the year were good, and the next 6-month period from November to April are historically the best, could it be that May through October just pulled forward those usually positive returns from November through April? Well, not so fast. It appears here we're looking at the 10 best sell in May periods since 1950. Look at that. All but one have ended the following 6-month period higher as well. So 90% of the time has been higher. But the most recent instance, last year, was negative over that time period. Was that an anomaly or just the start of a new trend? Time will tell, but we'd argue if we're investing in the stock market anyway, shouldn't our time horizon be longer than the next 6 months? And in stock market time, 6 months is a blink of an eye. We want to view the stock market on years long, 3, 5, 10, 20, 30-year horizons. One final point to close the loop on this topic. Here is each year that the S&P 500 stock market has been up more than 15% at the end of October. We counted, and there are 21 times. As you can see, a lot of green for the remainder of the year. And only one time was the market down for the final 2 months of the year. So stocks just keep going up forever? Allow us to provide a gentle reminder of what could potentially happen during market corrections. Recognize these names? These are the stocks that make up the largest weighting in popular stock market indexes like the S&P 500 and the NASDAQ. Now, we have to be real and acknowledge that these companies are vastly different businesses than they were during these times. In fact, most of these largest companies are actually 50 or more different businesses inside one large umbrella. But the fact remains, no one knows what the next violent sell-off is going to look like or how stocks will react. Here's what happened in the past. Here's .com. Amazon down 95%. Microsoft down 75%, Apple down 75% as well. And then also during the global financial crisis, Apple down 60%, Amazon 65%, Google the same, down 64%. Again, these are much more diversified businesses these days, but no one knows what the next major bear market is going to look like. And by the way, speaking of long-term horizons in the stock market, if you can combine that with fortitude to perhaps buy when the market is crashing and others are fearful, look at some of these almost shocking returns. Apple, 112 times, not percent, times your investment if you had bought at the trough. Amazon, 124 times. You get the picture. So perhaps rather than selling into a nasty bear market, is there an opportunity to sell things that didn't go down, maybe bonds, maybe cash, and buy the things that did? Have a great week.